Welcome to this week's Forex forecast for the week ending February 14th, 2025. Today we are talking about the DXY, the euro, the pound, the dollar versus the Swiss franc, and also gold. All right, guys, so it's good to be back. I did take the week off. I was sick for quite a while. My wife had something a couple weeks ago, and it kind of lingered, and then I caught whatever she had, and hers turned into bronchitis, and it's just been, kind of a crazy couple weeks here for my family, but finally feeling a little bit better today. So looking at the DXY, we are seeing the market just go back and forth. Obviously, we all know what's happening out there with the tariff comments from Trump, and every time he comments on the market, it just whipsaws back and forth. So the DXY has been difficult to read, at least this portion through here. However, what I did tell you guys, and even VIP members as well, was when the DXY broke this September trend line back here, I was looking for some weakness. However, what I said back here is that a lot of times when you get momentum like this, the market doesn't simply break down and just move straight lower, right? That doesn't tend to happen. What you get is the market breaking down, taking out some lows, grabbing that liquidity down here, and then just going sideways for a while. And that's what we've seen here so far from the DXY. Furthermore, what I was telling VIP members, which, by the way, if you do want to join us, see the link in the description of this video for 85% off lifetime access, or if you're on the website, click on that join VIP link. What we were talking about back here was the sweep of essentially equal lows back here. So we had the breakdown below that September trend line, and then we had these equal lows back here, meaning there was liquidity down here below the lows. So we saw that swept through here. We saw the reclaim into this area. From there, I was looking for that push into 109.50, which we got. Right now, from there, of course, we did see that volatility following the tariff comments. And since that time, the DXY has really just been kind of chopping around down here in this area. So what I would love to see from the DXY going into the weekly close is 108.07. So this high from Thursday. I would love to see the DXY close in this area up here. I don't know if it can do it, but I would love to see that right there to kind of confirm that we are going to get that push higher back here toward highs like this congestion back here sometime next week, right? Back here into this wick. Just because that would at least open things up a little bit to make things tradable, because right now, this right here, this range through here is really, in my opinion, not very tradable. So I would love to see a decently strong weekly close here from the DXY. I don't know if we're going to get it. The market was above this level. It's kind of fallen back a little bit now. So we'll see if we do get the 108.07 close above that level to signal a dollar strength for next week. But I kind of think that even if we don't get that close, even if the market were to close right where it is, currently, we could still see US dollar strength next week, and I'll show you why when we look at the EUR USD chart. Okay, so flipping over to the EUR USD, this pair has been pretty clean in terms of key levels. We have talked about all of these in the past, and what you'll notice is that, first of all, we had a gap down to start the week. And in fact, I'm going to go all the way back here to this price action that you saw above 104.40. Okay, so this right here. So what we talked about back here was obviously this was a key level for the euro, and we got the close above, the close below on this candle. Not only that, but it also closed below this high back here. So what I was telling you guys is on this candle right here, following that close, this area flipped back to resistance, and the next moves could have been down here toward 103.50, potentially lower, which obviously we got lower on that gap down to start last week. So, all in all, even though the market has been very sideways, technically speaking, it has been respecting these key levels really well on a daily closing basis. And so with that in mind, we are looking at, the upcoming daily close and also weekly close. So things get pretty simple here for the euro. If it closes below 1.035, okay, so this level through here, we've talked about this level a lot. You can see this up here was a fake out. We got the close below, the move down toward 1.02, even swept this low. And you can see here, close above, new support. This one, I don't really count just because, like I said, that was a gap down and the market closed pretty much right there at the key level. But I would say if the EUR USD closes convincingly below 1.035, and what I mean by convincingly is if it were to rally a little bit from where it is right now, because keep in mind, I'm making this video with about an hour and a half left on Friday. So if it were to rally a little bit and close, right here, that's not going to be enough. I want to see something down here in this area to really convince me that this is likely to flip to resistance early next week. So if we do get that, right, then we're looking at a daily and weekly close back below 1.035. Okay, so essentially the market is still range bound. However, this up here is essentially the mid-range of this range. So that means if the Euro USD closes below the mid-range, then we're likely to get a move back here toward 1.02, these lows through here. Now, if it closes above, then we're looking at, more ranging for the euro through here next week, okay? So it's really that simple. Where does the market close, today's session in relation to that 1.035 area? And like I said, it's got to be convincing, guys. A couple of pips above, below, whatever, that's not going to cut it. I want to see something very convincing here to convince me that we are going to get a move back here toward the lows, which of course would lift the DXY, okay? So I think that this is pretty clean in terms of 103.50. It's just a matter of where does this market close over the next hour and a half. So next up we have the pound, which has also been really clean despite the fact that it has been very sideways and also very choppy. We had that gap down to start the week with the tariff comments. It did bounce back though, and it's still just very range bound. But one thing I want to point out to you guys, and I mentioned this in the last video, if you go back there and take a look, this channel right here, okay, we talked about these lows, this trend line, and if you took a parallel level off of this high up here, what I said is when the pound was trading back here in this area, what I was talking about was the potential for some sideways action to get us over here toward the top of this channel. And sure enough, you can see here on Wednesday, and we talked about this in the VIP group. Okay, so I know some people caught this, but you can see that Wednesday's session retested this level exactly, right? Swept the high back here, retested this level, and sold off. Now, for the pound, okay, it's looking a little bit stronger than the euro here currently because this market is still above support. 1.2380, that is support right now. You can see resistance up here around 1.25. So really, going forward, it just depends on, does the market, break back below here on a daily closing basis to target some of these lower levels, potentially move back there toward the lows and a resumption of this channel, right? Or do we get the pound closing above 1.25, taking out this area next week for a push into levels like 126.17? So really, in my opinion, that's what it comes down to. Does the market, close up here in this area, or do we get the close below 123.80? Okay. So either close up here for that bullish move or close down here for the move down here towards some of these key levels. All right. So just a waiting game for now. You could, of course, try to trade the range, but just keep in mind, given where the market is trading with respect to the top of this channel, it is going to have to make a decision one way or the other. So I think that trading this range, might have worked back here, right? But I think that going into next week, this market is going to have to break one way or the other. Of course, if we're looking at the momentum here, I do favor the break lower versus the break higher. So another currency pair with really clean technicals is the US dollar versus the Swiss franc. So we talked about this one a few weeks ago when the market was coming off of this area down here, right around 89.90. And what I mentioned back here was the potential for the push up here into this area around 91.50, which we got, right? So that was really clean there. And what we talked about in the VIP group this past week was the fact that the market tested the bottom of this channel once again. So really clean price action here from the dollar franc, right? Now, at the moment, though, you've got to be careful because 91.50 comes in, just above current levels. So going into next week, this up here is going to be a critical test for bulls. Can the market get above that? We'll have to wait and see. But I do think, though, based on the price action from back here on the daily, that it's probably going to take a weekly close above this level to really convince me that it has broken out, because you can see back here, we did get a fake out above this level, close back below and retest as resistance, which this right here is kind of my bread and butter setup, the fake out, which I do teach in the VIP group as well. But the bottom line, guys, is that the market is going to have to close above this area, because if you look back here on the weekly, right, the dollar Swiss franc has moved within this channel. Okay, essentially it's just a range ever since back here in 2023. So the market has been very range bound for a while. The one thing I'm considering, though, and I'm wondering here, is does this end up becoming a W pattern or a double bottom, right? So that is one scenario here, because like I mentioned in the last video where I talked about this pair, if you go all the way out here to stay on the weekly chart, but just going all the way out, you can see where this has just been one massive range for this pair. So the question I have is, this right here is the current range we just looked at, but it's really just one range within a much larger range. And the market hasn't been up here in this area since all the way back here in 2022. So that is one scenario that I'm considering. But again, the dollar Swiss franc is going to have to get above 91.50 on the high time frames to really confirm this breakout. If it does, then we could very well see a push up here toward levels like 94, okay, 0.9415 or so up here toward this pivot, which could also line up with the top of that channel, but we'll have to wait and see. If, however, the market can't get above here and the US dollar does end up rolling over, okay, then you're looking at situations like this here where you get the market rejecting from this level once again, okay, next week, and then closing below here. And that would be bearish, as would a close below levels like 0.9, okay? But, all in all right now, guys, just a very range-bound market. But I did want to point this out because we did get a really nice bounce from that channel support this week. All right, so last up, we have gold XAUUSD, which has been on a tear, obviously, since the year started. And a lot of this here, especially, above 27.90, this previous all-time high back here, a lot of this has obviously just been fear-driven. Investors are seeking protection against uncertainty, really, because as most know, gold is considered the everything hedge. And so, this is especially true with inflation, with all the tariff comments and everything else. You can see where gold has just been in rally mode so far this year. So really, bottom line is, as long as the market is above levels like this back here, I like the idea of buying dips. Now, it did get a little bit extended back here on Wednesday. You can see we got a pullback on Thursday. Friday tried to break above. We got a higher high. However, the market failed to hold that. So it is looking like we could get a bit of a pullback to start next week, especially if the US dollar does strengthen. But like I said, I like the idea of buying pullbacks into some key support areas. One level to watch, one immediate level to watch, would be areas like 28.30. And the reason for that is you can see we have this high back here before the breakout, and Thursday's session came close to testing that, but not quite. So if on Monday or Tuesday we do get a push lower, or even Wednesday of next week, we get a push lower, fill in this upper wick first, and then get that move lower down here into levels like 28.30, sweep this low back here, and then the market bounces, that could be interesting for a move at least back here toward the highs, if not higher, right? Now, alternatively, of course, you have levels like this down here around 27.90, which is that previous all-time high. So as of right now, guys, I continue to like the idea of looking for buys on pullbacks. The only way that gold would turn bearish is if it were to close back below levels like 27.90, right? If it were to close below levels like this back here, fail to hold above it, then, gold could turn bearish, okay? But again, until that time, you have bullish momentum on your side. You also have the top of this channel here on the linear chart, right? Going back here to these highs and these lows. And this level, depending on when it's tested, if it's tested, comes in, potentially up here around $3,000. Even within the next few weeks. Okay, so there is that chance that if that uncertainty continues, right? Which, look, so far this year, I wouldn't count it out at all. That we do get that pullback either into 28.30 levels like that, or all the way back here toward 27.90, and then we get that push higher into areas like 3K, over the coming weeks and months. So that is one scenario to keep an eye on. Again, we have that bullish momentum. We have the breakout into new all-time highs over the past couple of weeks. So I do like the idea of looking for buys on pullbacks, but the key there is pullbacks. You've got to stay patient and wait for the market to come into key levels because, as always, even in a trend like this, timing is critical.